Hey everyone, and welcome back to the channel. Today's video is going to be an exciting one and a little bit different to the usual video because we have Sven from Invest With Sven who's going to be coming on and doing a stock analysis of the company Newcrest Mining, which is a gold mining company based in Australia. So he's going to be coming on and doing a full stock analysis for that company. And for those who don't know Sven, Sven also has a YouTube channel called Invest With Sven. I'll leave it linked down in the description below if you want to go check it out after this and see some of his other content. But he has a very long-term and analytical approach to investing in a similar way that I do, and I like his work, so I wanted him to come on and share with us an analysis of a company that I certainly wouldn't be analyzing personally because, as many of you would know, mining is well outside of my circle of competence. It's an area and industry that I personally wouldn't be analyzing. So Sven is going to come on and talk about that for you today. And as I just mentioned, if you're a long-term investor or a value investor, or you just like an analytical approach towards investments and looking at stocks, then I highly recommend that you go check out Sven's channel, which I've linked down in the description below. But with that said, I'll let Sven take over and take you through the analysis for the company Newcrest Mining.
Good day, fellow investors. First, I would like to thank Hamish Hodder for the opportunity to present myself here on his channel, and also thank him for his great contribution or on YouTube for his great analysis and educative videos. My name is Sven Carlin. I want to also present a stock analysis, a miner, so you will see how to analyze a miner, a commodity play in this crazy environment, well, where people will be looking for let's say real assets. But before that, let me present myself. My name is Sven Carlin. I run the Invest with Sven Carlin channel on YouTube. Please subscribe also there alongside Hamish's subscription. And just to give you a quick intro in who I am before we start analyzing the stock. I'm an independent stock market researcher, so this is what I do for a living. I research stocks and then I share my research. I have been a professor of accounting at the Amsterdam International School of Business, but preferred just looking into stocks, being a private investor, independent investor, and that's what led me to YouTube, etc. I'm also a book author, so check my book, Modern Value Investing. You have also 25 tools, how to research, how to analyze stocks from a value investing perspective, but also some modern additions to value investing. And all I try to do is try to apply common sense to this crazy environment. And let's dig a little bit into the crazy environment because it has to do a lot with the story of the company we are analyzing. So what's the crazy environment we are living in? The Reserve Bank of Australia cut interest rates. They will now start also with purchasing securities. In the United States, huge stimulus packages. The Fed is doing whatever it takes. Similarly, in the Eurozone, China also. So as there is so much money printing, we have to focus on, as investors, on the real hard assets and not on the assets that can be printed and your value can be diluted away by the printing. So if you are in cash, it's very likely that you are not going to end up well over the next 5-10 years because you are holding not a real assets. And therefore, also, if you have a portfolio, you might want to think about holding real assets, real productive assets. And also, that is also the message of this video. So, as Charlie Munger says, if you buy something because it's undervalued, then you have to think about selling it when it approaches your calculation of intrinsic value. That's hard. But if you buy a few great companies, then you can sit on your ass. That's a good thing. And then let's look at Newcrest Mining, the stock for today. It's mostly a gold miner with some copper assets, but over the long term there is more copper coming. So we have a commodity, security, also gold as a hedge, and then copper, likely the commodity of the electrifying future, that also gives you a hedge against inflation. So when you look at miners, how to analyze them, it's a commodity business, so you have to know the commodity outlook, you have to know the sector, the mining costs, where is the miner positioned on the mining cost curve, lower the cost, more safety, what's the life of mine, because miners need to always invest to find new ore to mine, but if you have a great mine, then that's good. the lower the debt, the lower the risk. You make a cash flow analysis, and then you also look at potential issues. Now, Newcrest is a gold and copper miner. They have mined 2.5 million ounces of gold and 105,000 tons of copper in 2019 for a revenue of 3.7 billion. Now, with gold, the supply is relatively fixed, thus it is a hedge against money printing. In this case, Newcrest, I picked it as an Australian company. It's a gold miner, but it gives you a hedge against whatever goes on. Also, copper, I made a video so you can just YouTube it or Google it, the long-term copper investment thesis. You'll regret not having it in your portfolio. On the mining costs, they have increased their gold production and they have extremely low mining costs. The flagship mine, Cadia in Australia, has extremely low mining cost, $132 per ounce of gold. So they are mining something at $130 per ounce and selling it now at $1,600. That's a money printing machine that not even the Fed has. And then if we look at the whole company, they have mining costs below other gold producers, other major producers, which means that in whatever environment, these guys should make some money, which gives a margin of safety. Then if we look at the long reserve life advantage that Newcrest has, double what other companies has, which means that other companies will have to reinvest a lot of money to replace the ore that has been mined. Newcrest is on a pretty set bet for the next 20 years. Additionally, they have just acquired Red Chris mine that has a potential to be another tier 1 ore body, which means it will add the same production as the other mines, two great mines that Newcrest has, Cadia and Lihir, have. Then there is a fourth big mine possible production, 28 years of production of gold and copper for the Wafu-Golpu mine in New Papua Guinea. And miners always make feasibility studies when they analyze businesses, projects, and they made a feasibility study on Wafu-Golpu using gold prices of $1,200 per ounce. Gold prices are now $1,600 per ounce, which increases the value of this project, and the net present value is 2.6 billion with an 8% discount rate. Probably now it's much higher. They own 50% of it, so 1.3 billion for Newcrest. Let's say 2 billion over the long term. The free cash flow generation will be more than $13 billion over the life of mine, now probably even 17 or even 20 with gold prices going up. The debt is little, so one of the less indebted companies out there, which also increases the margin of safety. Now, when it comes to the cash flow analysis, I estimated, went to the technical reports for each mine, looked at how much they expect to mine, what are the costs for mining, what is the price of gold, the price of copper, what are the taxes, depreciation, what they have to reinvest, and then came with a free cash flow, which is what you look when you analyze miners, and then you discount it as a present value. In this case, I put 10%. I'll give Hamish the Excel so you can play around with gold and copper prices and your required discount rate to see what is the sum of present values for a mine like this. So Cadia, let's say 5 billion if I expect a 10% return at current commodity prices. And Lihir, 4 billion at the same expected return. Then they have paid 800 million for Red Chris, Wafu-Golpu, let's say 1.5 billion in value, but probably much more given the potential copper and gold are offering. Total value for now is 12 billion at a 10% expected return. The current market cap is 11 billion Australian dollars, 19 billion, a little bit lower as I'm filming this, but markets are volatile now. So it is, let's say, a good investment and actually a gold hedge, a stable gold miner for the long term, and you have to see how it fits your portfolio. That's the key. These guys make money, and also as protection, these guys make money in American dollars because gold is sold in American dollars and have costs in Australian dollars. Now, Always look at the potential issues. Nobody likes mining, but it is necessary. There are environmental issues with Vafikolpu, with mines, depending on where those are. Then, of course, the injunction related to the Vafikolpu project has been lifted, which is a positive for the company. And then if we look at the prices, you see how those are volatile. So you might always think about having an investment strategy. You can put 5% in the company, then when it goes up due to volatility, you bring it down to 5%. So you get an additional dividend yield on the dividend yield that the company is already paying, reinvesting and growing the business for the long term. As this is a relatively safe miner, if stock prices go down and let's say your portfolio exposure goes down to 3%, you bring it up to 5%. And this is an all-weather gold hedging strategy. So to conclude, we have a commodity producer, gold, later in life more copper, that gives you a hedge against monetary policies, loose monetary policies, money printing, zero interest rates, and also gives you a dividend, gives you cash flows, it produces something, and it gives you the opportunity to hedge your portfolio with a relatively safe business, not just gold as a metal, but really as a business. So let me know in the comments if you enjoyed this video, subscribe to both channels, let me know if you have any questions when it comes to analyzing miners, and I hope I'll see you in the next video on both channels. Thank you!